Today, I made $5,000 trading. And in this video, I will show you step by step how I did it and how you guys can replicate this strategy and do the same exact thing. If you are new to my channel, definitely would consider hitting that subscribe button. I have a lot of good content that will help you guys out with trading. And secondly, if you guys want help with your trading, if you want one-on-one help where you would get on a Zoom call with me or one of my coaches and I will show you my exact strategies step by step, everything that's included. We'll go into the mindset, the psychology. If you guys want that help and to get to $10,000 a month in the next 3 to 6 months, click the link below to book a call and to inquire for my one-on-one mentorship. That's the only way that you guys can apply for my mentorship and get involved. So guys, if you want to do that, definitely click the link below. Without further ado, let's get into my computer. So first off, I am trading NASDAQ NQ. If you guys do need a broker to trade your guys' stuff, you're going to need to go to tradeovate.com. Now once you guys go here, let me actually go to like the main website. Okay. So this is their main website, Tradeovate. This is the broker that I am using to trade on. And I'm no longer doing forex. If you guys are with these sketchy forex brokers, it's time to move on to the big boy leagues and to actually have your money protected and safe. So when I was trading forex, so I was still trading the NASDAQ, the Dow Jones, and the S&P 500. So it's really personal preference what you want to trade. I don't know why, but I've noticed the technicals on NQ NASDAQ have just been on point lately. And if I bring up this trade right here, this is the trade that I took. I want to show you guys my executions. So you can see my executions are right here. Bought, sold right here. And we're going to go in depth on this trade and why I took it in just a second. So you guys need to understand that when you are trading indices, there is realistically a key window of time to be trading, and that's right at the market open. So you could see the market open was back here at 9:30, right here. So I am on the minute one chart, and the setup that I'm going to share with you guys, like, it reoccurs time and time after again. So this isn't something that's going to work for a little while. This is going to work forever. So first off, you guys want to be trading when there's money in the market. The market open is at 9:30 a.m. EST. And with your time, I have my time zone set to UTC 5, so I'm in alignment with the New York timing. And then when I'm trading from 9:30 to usually about like 10 a.m., 10:30. I like to get like 30 minutes to an hour of trading time in the mornings. And if I don't see a setup, usually I'll come back later in the afternoon, like during the Asia session or the beginning of the London session, because there's a ton of volume during that time as well. Now, when it comes to entering a trade, I am using one key indicator. And if you guys go to indicators, you're going to type in Lux, Algo, Fair Value Gap Indicator right here. Now, on yesterday's video, the one previous to this one, I explained what fair value gaps are. So if you guys want, what I'd recommend doing is pausing this video, going back to the fair value gap video, so this video that we're on right now will make way more sense. So guys, this is why I took this trade. Usually I like to look at the beginning of the New York session. And I do also have this indicator right here, the sessions indicator, this one right here. And once you do that, what you're going to do is go to the settings. You only have the New York session clicked, and then I have this gray color right here with the opacity at 10%. So if I go to like the minute 30, you can see I have all these gray shaded areas that are behind the charts that represent where the New York session starts and where it ends. You guys need to be trading when the money is in the market. If it's not during the New York session, Asia, London, it's not going to be too volatile. There's not going to be too much going on. So on today's trade, I was actually on the minute one chart. I have been finding a lot of success on the minute one chart. Now, one thing that I like, and a lot of you may disagree, is a lot of people, they say, oh, the minute one chart is just too volatile, it fluctuates too much. That's good because you get data extremely quickly. Now, if I go to a higher time frame like the minute 15, dude, there is no real fair value gap in here where I can get an entry. The candles are too big. The space and time that it takes up to make a move, it just takes way too long. Versus on the 1 minute chart, this trade that I took, I still made 5K. I could go and make 5K trading on the minute 15 time frame, the minute 30, but it's going to take so much longer for that trade to play out. And what I like is when you're on these small time frames like the minute 1 and minute 5, you get data so quickly. Like, you get to see the outcome of your trade very, very frequently. So first off, beginning of the New York session, what are we doing? We're pushing up. This is a major hack that I'm going to give you guys right here. When you are trading, you want to be in the markets when the candles are very small like this. Where they're very small, they're not very wicky, they're not displaced all over the place. We can see from the open of the New York session, it drops down. And what does it do? It gradually starts to push up higher and higher and higher. So what I was looking at is I saw the market open. I was like, okay, like it's pushing up. I don't really see like an entry model of fair value gap for me to take a trade yet. So I'm going to just wait. And then I kind of saw this fair value gap in here form. And if I turn the indicator on, you guys can see. Boom. So I saw like a fair value gap in here right before the market opened. Potentially could have taken a trade there. But I showed it to my laptop around like 10:10 in the morning. I was right around here. So as I was seeing this market structure all in here, I saw a ton of consolidation. And I was like, do you know what? I need to see like a fair value gap, because ideally, you guys should be able to show up and look at the charts and be like, uptrend, downtrend. You should be able to identify what market structure we are in and what type of trend that we are in very, very quickly. And you don't want to go against your gut. You don't want to make it difficult and be like, well, on the daily time frame I did this, the 1 hour time frame I did this. Like, keep it stupid simple. That's how trading should be. If we're in an uptrend, look to take longs. And that's the thing that I love about NASDAQ, S&P 500, and Dow Jones is they're always in an uptrend. So a lot of the time, a majority of the positions and trades that you guys are taking are going to be long positions. You're going to be taking buy positions, not so much sell positions. So as I was watching price, let's replay back. I saw we created this beautiful FVG right here. And that's where I set up my position. I was like, okay, perfect. Price should come down, hit that FVG. I'll have my stops. Remember, the stops always go below the first candle that makes a fair value gap. What's the first candle? Right here. This little doji. So that's where my stops were, right below there. And then for my TP, I just went for a 2-to-1 basically on this trade. But this is exactly how I had the trade set up. So I saw the fair value gap, my entry model. It showed up perfectly. It was absolutely perfect. What did I do? I set my stop loss, set my TP, and I let the trade do its thing. Boom, hits my entry. Gives me another shot if I missed it to get an entry. Gives me one more shot. And then after this, it just catapults to the upside and then eventually goes and hits the TP. Now I notice a lot of you are very erratic traders. When you guys get into a trade, let's say that we're right back here. When you guys are looking to get into a trade and boom, your trade is executed, you're now in the trade, you need to be able to kind of take yourself away from the trade and not be so involved. After you have executed the trade, if you're using proper risk management, you're not over leveraging your account, you're going to be perfectly fine. There's no need to feel any stress, any anxiety. You should not be feeling anything like that when you guys are trading. That means that something's going on in your mind that you need to freaking change. And I've noticed a lot of people, when they experience that anxiety, that fear, whatever it is, they're over leveraging too much of their account. I mean, if you're and that's one thing, but two, they're not experiencing high levels of confidence within the setup that they took. I took a trade with a student last night. I took this trade today, And I was 100% confident. I knew that this was my setup and this is the trade that I wanted to take. I took it and it played out absolutely perfectly. So one thing that you guys can do is, like, as you're trading, when you're in a trade, do other stuff. Go take a shower, go walk your dog, do some push-ups, whatever you need to do to kind of like take yourself away from the markets, because I see a lot of people do that where they're in a trade like this and then it pushes up to here and they're like, oh my gosh, it's so close to my take profit. Do you know what? I'm going to just take it. It's like, no, dude. You still have 14 ticks or 59 ticks away from your take profit. Like, the trade's not done. Don't close it prematurely, because if you're realistically going for like 2 to 1s, you have a risk reward ratio of 2 to 1. If you're going and taking the profit prematurely, at the end of the day, you're realistically going to be like having a risk reward ratio, and the outcome will be like 1 to 1s, because a lot of people, they take the profits early, but then they let the losers drag and go forever, and then they don't take the losses, or when it does hit their stop loss, like, oh, they get all angry. So you need to make sure that you're letting the market do what it needs to do. If you're confident in your setup, there's no reason to be worried. Just let the markets do their thing. So guys, this is what I want to go over in this video. This is what I did trading today, the trade that I took. Hope you guys found this insightful and valuable. If you guys do want one-on-one help, you want that one-on-one mentorship, click the link in the description. Book a call with me. I'll ask for a date to choose. You'll choose a date, time, and then you'll fill in a couple questions about your personal information, and then I will call you. So guys, I will talk to you soon. Peace out.